Hi everyone, Paige Panzarello here. Happy Friday. I'm happy to report that so far we are not terribly affected by the fires that are happening in Southern California. I hope and pray that you and your family are safe and that you are not in the path of the fire and certainly not in the path of the horrible smoke that is being created. So please be safe out there. I wanted to talk to you today. Last night I was teaching my master class for the Building Wealth with Notes students, and we were talking about loan modifications. And one of the beauty parts about becoming the bank and being a note investor is that you have the power and the control to actually help people make money, first of all, helping people to stay in their home by giving them a second chance in their mortgage, in their house. And that's something that's in your control as a note investor. And you get to make money doing it. Understand that a lot of these people have had loans that were put in place and then modified a couple times, from 2005 to 2010 and then again in 2015. And really, the banks some of the banks, in my opinion, took advantage of some of that process, right? So these people were in terrible loans that they couldn't afford. And I'm going to give you an example in just a moment about a loan modification where something like that happened, okay? One of our notes, and we were discussing it again at the master class last night. But as the bank, you have the control to give a family a second chance to stay in their home. Life happens to all of us every single day. Whether it be job loss or divorce or a death in the family or medical issues that can cause us to have a kind of a speed bump, right? And not be able to pay our bills, including our mortgage. And sometimes these people, had a year or so where they just couldn't pay, and then they just got so far behind they've kind of thrown up their hands and said, well, no one's willing to help me. And that is what gives us as note investors a unique position in that we can actually help people and make money doing it. And I got to tell you that every time I get to a place where I'm able to work with a family and put a loan modification in place, and get them back on their feet and get them back on track and keep them in their home, it's very satisfying. It's kind of creating that community again and that sense of pride of ownership in their home and for themselves and their lives as well. So, again, as the bank, you're able to do that. And if that's at all appealing to you, then please join me. I've got an upcoming workshop coming up, the Building Wealth with Notes workshop, and I teach you all about note investing, how to find notes, how to fund notes, what to do with them. And again, what are the different exit strategies, one of which is a loan modification, where you can make money helping people to stay in their home. And that is within your power. So join us. Go to buildingwealthwithnotes.com for more information. It's coming up in Simi Valley, California on November 8th through the 10th. And I'd love to have you there. I'd love to teach you how you can be the bank and how you can either, take this on as a full-time investing career or just supplement your income such that, you turn a non-performing note into a performing note and have monthly mailbox money without the headache of tenants and toilets. And that's really what a loan modification does. It allows you to have monthly cash flow. You work with your borrower to stay in their home, to start paying their mortgage payments again. And as the bank, you have a variety of different things that you can do as long as you have a willing participant in your borrower. You can create a win-win situation such that you can lower interest rates. You can extend the length of the term of the note. You can make bring down their principal balance to reflect the current market value of the property. Now, why would you do that? You would do that because if you buy these non-performing notes at a discount, you have some flexibility in order to work with that borrower and still make money doing it. So again, you're going to base your purchase price, and I know you've all heard me say this before, but you're going to base your purchase price for that note on a discounted rate of the current market value of the securing collateral, which is the house. Okay. And when you do that, you build in a cushion of equity, and it allows you flexibility to work with that borrower. So again, you can lower the unpaid principal balance and make it a workable situation for everybody involved. And so last night when we were teaching, when I was teaching the class for the master class, we were discussing one of these loans, and a question was asked, hey, the tape, meaning what the asset manager has sent us for assets for sale, is called a tape. So when they send that to us, it gives a bunch of different information, including the principal and interest payment that the borrower originally had in place. But when we did the amortization schedule, when we were looking at the loan modification and how to creatively construct a win-win situation, even keeping the same original terms, because the borrower was very behind, even keeping those same original terms, the payments didn't match. And she couldn't figure out why the payments didn't match. Here's why. When that original loan was put in place, it was put in place as an interest-only loan for a short period of time, a couple of years. And then after the couple of years, the payment bounced way up and it adjusted to now a principal and interest payment. And what happened, and this is a lot of what happened in 2005 and was the precursor to the crash of 2007, is that when a lot of those loans were put in place, a lot of them were interest only or really low interest, like 2% interest for the first couple of years. And buyers, borrowers were going into these homes barely able to afford the interest only payment, much less when the payment adjusted. And so once the payment adjusted, it became unbearable and unsustainable for them. So we were talking about it, and I teach you, again, in going through the Building Wealth with Notes workshop, I teach you how to recognize, hey, this was a loan that was put in place, it was interest only. And that's why there was the discrepancy in the payment that we discovered last night. But again, at Building Wealth with Notes, I teach you how to create a win-win situation such that you can still make a nice return on your invested dollars, help a family to stay in their home, and then be able to, kind of give them their sense of community, their sense of pride of ownership, help them to want to work with you and want to make those monthly mortgage payments to you. Now, again, those are mortgage payments. They're not rental payments. So that's money, that's mailbox money that comes to you without that headache of tenants and toilets, meaning if the air conditioning breaks or the toilet overflows, your borrower is not going to call you because you are their bank. You are not their landlord. So that's the large difference, between the two. So you can create those monthly streams of cash flow without having to deal with repairing the home, because you don't, because you're not the landlord. You're the bank. And let me tell you, it's good to be the bank. So I hope you will, that's just a little snippet of a little thumbnail version of what I teach you at Building Wealth with Notes. Again, there's so many different exit strategies that are available to us as note investors, and it really allows us to mitigate our risk. So I hope to see you there. Again, go to buildingwealthwithnotes.com for more information on the upcoming workshop. It's just a few weeks away, and seats are limited. I do limit the amount of people in the room. There will be strong investors there. I really promote networking between everybody, and it's a lot of fun too. And I do feed you lunch, by the way. So it's a great time, and you really learn a lot about how to be the bank. I give you all the tools, including my team, access to my team. So I really equip you with being able to walk out that next day and start investing in notes, having all the tools in your toolbox. So I hope you can join us. If you've enjoyed this little video, please make sure to like my page, like Cashflow Chick here on Facebook, and follow me. And I'm going to be keeping up with adding more value to you. If you have any questions, please feel free to reach out to me, info@cashflowchick.com. And I look forward to seeing you next time. Have a great weekend, everybody. Stay safe. Bye.